Good morning, everyone. Today we are discuss about the public finance. Introduction of the public finance. Public finance is a study of income and expenditure of the government at the central, state, and local levels of government. Our government has to perform certain functions in a country, such as to supply certain public or collective goods which individuals cannot or do not singly perform. Then we'll move on to the scope of public finance. What is public expenditure? Public expenditure refers to the expenditures incurred by the central, state, and local governments to satisfy the collective social wants. The expenses of the public authorities, central, state, and local government for protecting the citizens and for promoting their economic and social welfares. They are doing expenditure on wages, salaries, subsidies, and transfers expenditures on goods and services such as infrastructure like road, electricity, telecom, and human capital accumulation like health and educations, interest, expenditure, etc. Then public revenue. Government is earning the income through tax revenue and non-tax revenue. Tax revenues from the direct tax and the indirect tax. Non-tax revenues is the form of fees, fines, gifts, grants, etc. Then public debt. Public debt is a loan raised by and is a source of public finance. Public revenue falls short of expenditure and the government has to borrow from internal and the external source. Then financial administration. Money cannot manage itself, and efficient, energetic, and scientific management is required to look after the public expenditure, public revenue, and public debt. Last scope of public finance is economic stabilization and growth. Public income and public expenditure to secure stability in a level and prices by checking inflationary as well as deflationary pressure. Then we'll discuss about the objectives of fiscal economics. First objective is economic stabilization. To maintain the economic stabilization by controlling the inflations, deflations, and reduce the unemployment. Then economic development. We are in the mixed economy, so the development in various area is necessary. So government is encouraging the savings and investment. Third objective is resource allocations. Efficient allocation of the natural resource has to be followed by both private and social goods. Then income and wealth distributions. So to reduce the inequalities by distributing the incomes and wealth through the tax and spending system. Then infrastructure development. Infrastructure, the government has to do the more expenditure on developing the roads, schools, and hospitals in rural areas as well as urban areas also. Then balance of payments. Our government is always tries to have the balance of payment to avoid the deficit in the balance of payment. Next, instruments of fiscal policy. So we have here three major tools. One is a taxation and another one is a public expenditure and final one is a public debt. So under the taxation, the government is earning the more income through the income tax as well as indirect tax. So under the direct tax, corporate tax is that corporate tax is levied on the company's profit. Property tax, it's on the property ownership. Indirect tax. Indirect tax, it talks about the value added tax. This is levied on the each stage of productions and distributions of the product. Then sales tax. Sales tax is on the goods and services usually imposed at the point of sale. Then exercise duties. It helps to control the consumptions of the harmful products like alcohol, tobacco, etc. Second one is that expenditure. Expenditure, we are doing a current expenditure and capital expenditure. So current expenditure as a public service, spending the expenditure on the healthcare, education, defense, law enforcement. Then transfer payments like pension, unemployment benefits, and social securities, and that provide a financial support to the individual without requiring a service in return. Then capital expenditure. Under the capital expenditure, we are discussing the infrastructure investment on the roads, bridges, school, hospitals. Then important area on the research and development also. The government is giving more subsidies and grants to the business peoples and to budding entrepreneurs also. Then borrowings or debts. The government is raising a loans. If that money is not enough, they will creating a new money through the deficit finance. Thank you, girls.